Since President Trump's inauguration on January 20, 2025, the S&P 500 is up just over 1%. In contrast, the MSCI China ETF has surged roughly 17%. The iShares Eurozone ETF has risen about 6%, and the iShares China Large Cap ETF is up around 16%. The Dow Jones Industrial Average remains barely positive, while the iShares MSCI Emerging Markets ETF has climbed close to 6%. The Freedom 100 Emerging Market ETF has also gained about 6%. However, the iShares MSCI India ETF is down approximately 1.5%. Comparing the tech sector, the Invesco QQQ ETF, representing US tech, is up about 2.5%. Meanwhile, the CraneShares CSI China Internet ETF has soared roughly 20%. The Freedom 100 Emerging Market ETF is heavily weighted towards Taiwan, Chile, South Korea, Poland, and Brazil, making up 75% of the fund. Its top holdings include Samsung at 8%, Taiwan Semiconductor at 7%, Banco de Chile and Bank Polska each at 4%, Hanhai Foxconn and SK Hynix each at 3%, and LATAM Airlines at 3%. The fund's selection criteria encompass 86 variables, such as freedom of movement and capital, rule of law, and personal economic freedom. India's low weighting in this ETF is due to its high tariffs and concerns over personal freedom. India has the highest average tariffs in the world. With a consumer-driven economy, a population that recently surpassed China's, and a highly educated English-speaking populace, India remains a significant player. Narendra Modi, India's leader, has met with Trump, and both have agreed to resolve trade and tariff issues. Emerging markets can be volatile and subject to uncertain regulations. Government policy is a major source of market uncertainty. Investors are increasingly seeking companies that prioritize their own interests over the state's. Historically, investors have avoided emerging markets due to concerns about autocracies and other risks. Credit's script source from CNBC.